looking at advanced management accounting, ladies and gentlemen, and remember, basically, I will go straight away to, the introduction part. And now we have the handout. So mine is to help you understand what this subject is all about from the handout that now all of us happens to be having. Yeah. There is a handout that you now have called Advanced Management Accounting. So I hereby share my screen. So somebody should be able to help Mr. John there with that handout that I've just shared. Now, ladies and gentlemen, first of all, you have to appreciate that management accounting, or rather advanced management accounting, is a beautiful subject. Yeah, because at the end of the day, wherever you'll be working, even if you're a financial accountant, you'll be required here to produce management reports. Most of them will entail management accounting. So I'm reading from your handout, the introduction to management accounting definition, that management accounting is the process of preparing and providing financial and non-financial information to managers to help them in planning, decision-making, and the control of business activities. So whenever we talk about management accounting, we are looking at management accounting as the scientific process of decision-making. Decision-making. That science that we use to make optimal decisions is what we are calling management accounting. So accounting for managers. Remember, as I was telling you the other day, most managers outside here may not be having the requisite skills to even run their businesses. At times you get a manager who simply became a director, courtesy of his investment. So somebody who never even finished high school, but now they have money, 10 million US dollars. They've been able, in this case here, to start a big bank. Yeah. And then they find themselves, in this case here, in management as directors. So then not a problem. That is not a problem. The issue is, do they have advisors? It's important for you to have advisors. And one of those advisors you will need is what we call a management accountant. So the management accountant, ladies and gentlemen, then will be able to provide, accountant here will be able to provide what here? Schedules that managers will be using to make informed or rational decisions. Now, ladies and gentlemen, please listen and listen to me very well. You see, financial accounting, we only look at what we call quantitative data. Yeah, where in this case, like we said yesterday, that financial accounting thinks as a subject, quote unquote, that money is everything in life. So they measure performance of their entities in terms of profits, right? Money. Management accounting is broader. It will use the quantitative information, and at the same time, it has what we call qualitative information. So it looks at those unquantifiable factors. Management accounting for purposes of business sustainability, that is longevity. Yeah, we'll be looking at qualitative information as well. Qualitative information. So qualitative information is that information that you can't quantify in monetary terms, but it is very important for your business to move forward, to even become better and better. That is why at this advanced management accounting level, we don't just study the normal management accounting. We study what we call strategic management accounting, which now talks about how do we make these businesses sustainable in a way that they will be able to outlive even the owners. It's by looking at the qualitative factors. The fact, ladies and gentlemen, that you made huge profits last year doesn't mean that you're going to be there in the long term. Long-termism needs you to fuse Whatever finances you have with these qualitative factors like which ones here, like customer satisfaction. You see, customer satisfaction is something that you may think is not really money oriented. So that when you have, for example, meetings where you call your customers even for lunch, you count that as a loss. No, it's important for you to ensure that your customers are getting right quality, prompt services, and even at times you must call in them to attend this dinner and whatever. Let your customers be happy, because that is what here is a strategy. And that now introduces us to what we call strategic. Okay, thank you so much, 𝐄𝐧𝐫, for sharing that handout with these other great students. So then that introduces me to the strategic management accounting, which you can see on your handout there, SMA. Strategic management accounting is the use of management accounting information with a long-term and outward-looking focus. Long-term, outward. Good managers shall not be inward-looking into their business alone. Good managers must also focus on what competitors are doing, especially by considering competitors, markets, and strategy to support sustainable competitive advantage. Sources of strategic management accounting information from your syllabus. They want me to teach you where will we be sourcing this strategic management accounting information from. Yeah, we can get this information from internal sources. Yeah, where as management accountant, we read and actually prepare budgets, cost records, performance reports, financial statements. We can as well get this strategic management information from external, because we must be an outward-looking organization. So external sources, we have market trends, competitor analysis, industry benchmarks, economic data, like from our Kenya National Bureau of Statistics. And then, of course, we have other many sources. You can sit down with your customers. They give you feedback. Government policy, technology, trends, etc. Then we have the role of this management accounting in strategic planning and control. Ladies and gentlemen, this subject will help us in setting long-term goals, both profitability and the growth. This subject will help us in resource allocation to profitable areas. Because remember, for you to become sustainable as an organization, you won't be joking around. Because, ladies and gentlemen, we have what we call strategic drift. We have what we call strategic drift in terms of how we run our businesses. If we are not careful, listen, you will get in this case here, for example, the market outside there wants you to behave in a particular way. Wants you to behave in a particular way. For example, the market outside there could be telling you as a college, if it's RCM, that, hey, many students, for example, would want to be taught online. Yeah, perhaps that is what the market is telling you. And then you go ahead and disobey that. So if you disobey what the market is telling you, automatically you will drift. And once you drift, what will happen to your long-termism? No, you'll cease being a going concern. Just like right now, we're being told as accountants, we must embrace AI. Are you guys embracing AI? Yeah, AI in everything that we do. If it is making up of financial statements, use AI. Interpretation of these financial statements, use ChatGPT, the paid ones, 5.0. Yeah. And then in this case here, you don't follow what the market is telling you. Then your business model or even your profession, your career will not be sustainable. You can't sustain it. You will lose it. You lose a competitive advantage. So management accounting, especially the strategic management accounting, ladies and gentlemen, we are saying in this case here that this subject is great because it will be able to, once we become so good at it, using linear programming and other models, we'll be able to know where should we allocate our resources optimally. What are our long-term goals? All right. Yeah, I can see 2 new messages. Let me just read them. Yeah, thank you so much. This ninja, I'll have to buy this ninja lunch. Thank you so much. Now, remember in this strategic drift, there are so many companies that have been able to strategically drift onto their death. Look at a company like Kodak. Yeah, Kodak, for those of you who are a little bit old, I'm so sure Kuria and Doreen here, maybe you never got to know this company. Do you know it? Really? It used to be a big company in terms of film, in terms of photography. These guys here would come to our homes during those old days on Sundays. They were, in this case, here taking very good photos of us. And then they'll tell you that we will bring this photo back after 2 weeks, because they used to talk about wash. Yeah, they had to go with some film and they do a few things here and there, and then they bring the photo after 2 weeks. Ladies and gentlemen, the dynamics changed. We had Samsungs and these other big telephone companies, mobile telephone companies, bringing the digital camera. Digital camera, of course, in this case here, these guys would come, or even using your phone, you simply snap a photo and you get that photo right away, which is ready for uploading to your social media handles. Kodak could not foresee that this was a big threat. They never embraced this technology. They still got stuck to their old technology. One day, ladies and gentlemen, in this case here, we had the CEO and the senior management doing a press release saying that, you know what, the business can no longer continue to operate. The business has to cease operating. Why? Because they drifted. And this is now what management accounting is against. Because management accounting wants you to have a competitive advantage. And for you to have a competitive advantage, then you must always think about what the market wants, what the economy is saying, what in this case your competitors are doing. You must be able to reach that level that we call the blue ocean. Yeah, this is very, very important, very, very common in management accounting. Blue ocean strategy. Blue ocean strategy. Remember, we have the red side of the ocean. So for those of you who have ever seen an ocean like Indian Ocean, just in Mombasa here, yeah, there is this quite shallow end of the ocean, which is quite dirty. Yeah, lots of sand. What we call in this case here, the red. So that red in terms of business, ladies and gentlemen, is basically blood. Blood coming out of what here? Companies that are not able to compete, which are being killed every day, because business is war. And that is why we need to understand management accounting, because management accounting is about sustainability. It's all about innovation. It's all about, in this case here, making your customers happy, looking for new customers. All right. So according to management accounting, for you to sustainably, yeah, be there in future and keep on even growing, you need to be in the blue ocean, deep end. At the deep end there are no sharks. At the deep end there are no competitors. It is that zone of zero competition. And that is why if you look at, for example, companies that made huge profits during COVID-19. Yeah, COVID-19. Most of us who really benefited, like myself, I don't shy away. COVID-19, of course, created some of us. Like RCM used to be a very, very small college. Yeah, of course, we used to have 3 branches. Like now we have 2 branches, of course, yeah. Used to be yeah, in terms of infrastructure, big. But in terms of student population, almost 0. We used to barely survive. We could even struggle to pay rent. But COVID hit. Actually, I thought I'd died. Yeah. I even remember I went to my home area, stayed there for about 3 months, until a young man called Mohammed, a friend of mine, told me that, Mwalimu, we have to do these exams. And there is something called Zoom. I'd never heard of Zoom before. This is the guy who introduced me to Zoom. And then I started inviting students like that. 40 minutes, the class was over. Yeah. Then we knew that there is what we call paid. I started now using camera. Slowly now here we are. We have about 4,000 students who are spread across. And for you to know that this online thing is a serious thing, I can see we are a good number. I would want you to comment there and tell me, which county are you coming from? Kuria, you come from which county? Nairobi County. No, but there is a home county. Machakos, how about you? Siaya. Wow, great. How about these online ninjas? You can see we have Kwale, Homa Bay, Kitui, Nakuru County. Yeah, Nandi. Wow. Thank you so much, Maslin. Yes, Bomet, I can see Eldoret, Meru. You can see this is now how powerful this thing is. This is how powerful it is. So we must always think about what here. I mean, it doesn't matter. So long as you are able to innovate very, very well, you can never, ever go wrong. Look at a company like Safaricom. I remember there is a time, ladies and gentlemen, and I have to give you these stories because AMA has very practical case questions, theory questions. You must understand this very well. So there is a time when the right Honorable Amolo Odinga came and told his followers to resist Safaricom and to resist other companies like Brookside. And you know, Amolo Odinga has really a big following. Brookside was so seriously affected with that directive, seriously affected. Safaricom, on the very same year, their revenue grew. Their revenue went up. Look at Starlink on the data connections. Starlink came, and in this case, he told people now, at the end of the day, Safaricom will, see quite dust in this competition. It never so. Most of us are drifting back to Safaricom. Why? It's because already Safaricom is at the blue ocean level. It's right deep in the oceans there. There is no competitor who can really come and match, simply because they're applying what we call strategic management accounting. They have been able to innovate. They have been able to come up with new products. All right. So in this case, like now, M-Pesa is phenomenal. Go to South Africa, people really respect M-Pesa. All right. So it will be very, very hard for them to be dethroned. So remember, during the Right Honorable Amolo Odinga's time, how do you tell people to resist Safaricom? You resist Safaricom and yet they have the best data. Yeah, people would switch off their phones like for 2 hours. But after some time, you'd want to see whether there is a friend who has sent you M-Pesa. So that is the kind of management accounting that I would want you to start looking at. A subject that will make us, in this case here, think out of the box, think widely. Like I have a company which I always keep on talking about. I know it makes bad products, but in terms of innovation, these guys must be having very good innovators. This company is known as EABL. I remember in 2011, they hired our organization to go and do for them what we call agronomics. Agronomics basically is a study of how a company's products can be tailored to meet needs of disadvantaged groups. Like if you do some product innovation, and then you are able to satisfy, say, disabled persons, then automatically, in terms of agronometry, we'll say that you are doing very, very well. So at this year, 2011, EABL wanted to know why women don't drink their products. And out of that survey, they were able to get very good insights that brought up development of new products. So of course, they had our firm to do this research, and we were going, in this case here, to some of these hotels outside here. Yeah. Whenever you got a lady who was drinking even water and who was interested in our research survey, we're asking them a simple question. Why are you not drinking Tusker? Why are you not drinking Guinness? And these ladies were very forthright with us. They told us, some of them, that we tried those products some times back. And the taste, no, it was very, very bitter. That is why since 2012, they started making their sweet beers, targeting ladies. Yeah. Is there anybody who has, or rather, who knows any beer which is sweet? I know you don't drink, but of course from advertisements. Anybody who could be knowing of a sweet beer? Anybody who could be knowing of a sweet beer? Don't fear, Mwalimu. From advertisements. Sweet beer from advertisements. Yeah, like somebody is saying Tusker cider. Yeah, I'm told Guarana here. Great. But now, interestingly, and this is the importance of innovation, a company that innovates a lot. Interestingly, when these sweet beers were produced, and then we went to do a post-implementation survey, we realized that there were more men who are drinking these sweet beers than women. So that tells us what here? That there were men who are suffering in silence. So when you innovate, you get new niches. You are able to get new markets, etc. And that is what management accounting is, and that is why I love this subject. It is the best. It is the best. I don't know whether Kingfisher is sweet. I don't know. We shall overcome. And of course, I know you guys get to read about that from your newspapers and from your televisions, right? Nobody has ever tried. So the role of this management accounting, strategic planning and control, it will also help us to provide what we call performance measurement, the KPIs, the balance scorecards. It also supports risk management because risk management will prevent us from dying soon. This subject wants us to think about long term. So anything that is risky, we need to study risks and know how to mitigate and how to, of course, manage them for the company to survive like COVID-19 is a risk. Yeah. So then governance and the control of information. Ladies and gentlemen, this subject of ours. Yeah. Because, it's not like financial accounting, which will be doing financial statements at the end of the year. This subject of ours ensures that whatever information we have will be accurate, reliable, and we shall be able to get this information on time. On time. I hope you're able to see your handouts. Yeah, please, let's go there to 1.3. It's written 1.3. Yeah, so in terms of corporate governance, remember corporate governance, ladies and gentlemen, we need data to be able to make information, or rather to be able to make decisions. So management accounting will ensure that you get accurate, reliable information and promptly. The subject will help us to protect against misuse of sensitive information, promotes accountability through proper reporting systems, aligns with corporate governance rules. Yeah, so remember, ladies and gentlemen, this is really a key pillar. In terms of corporate governance, remember, corporate governance gives us a way that these entities are directed and controlled. Yeah, how do we direct and control our entities? This is what we call corporate governance. Corporate governance. It has various pillars. Like it has a big pillar called what here? Called risk management. Yeah, it has a big pillar called, in this case here, for example, information to stakeholders. When you use this management accounting, it is not like financial accounting, which waits like at the end of the quarter to get financial reports, or at the end of the year for you to get financial reports. This is an ad hoc subject, which somebody can ask for a management accounting report, say on Monday, on Wednesday. Yeah. So in this case here, management accounting, the moment you start using it, then in terms of your governance, how you are governing this institution, then the data you get will be very accurate, very reliable, and it shall be given to you promptly to aid decision making. Very, very important. All right. All right. So alliance with corporate governance. So scope and limitations of management accounting. We start with the scope. So this subject will help us in costing, budgeting, variance analysis. For strategic decision support, management accounting will help us here to do pricing, make or buy investment appraisals, etc. Performance measurement and control. We shall be able to see how do we measure performance of our workers. Limitation, it's of course based on lots of estimates and assumptions, can be time consuming and costly, relies heavily on quality of input data. If input data is really bad, then it's a GIGO, garbage in, garbage out. May not capture qualitative factors effectively. As much as, ladies and gentlemen, we are saying that this subject will be looking at qualitative factors, but you see, you can't be able to quantify qualitative factors perfectly. No. There will be a lot of what you estimate, estimations like what they're telling us there. How do you come and tell us that our employees have a morale of up to 60%? No, it's not possible. It's not possible. All right. Then we have what we call ethical standards for management accountants, which will be the last thing under chapter number 1. Ethical standards for management accountants, I read them. Number one, all management accountants will be required to exercise integrity. Under integrity, they'll be required to be honest and straightforward. They must be objective in whatever that they do. You guys must be objective. Remember, objectivity stands for independence. You shall avoid biasness or conflicts of interest. Hautakuwa na kipendeleo. Confidentiality, you are doing management accounts. We expect you automatically, ladies and gentlemen, to get access to very sensitive data. Don't go, in this case, you're discussing that data, for example, with your spouses or even friends. Accountants will not be people of many, many words. Yeah. So, for example, you have done management accounting for Safaricom. Then you realize, ladies and gentlemen, that Safaricom will be posting huge profits at the end of the year. When these profits will be increasing in that high margins, then automatically the market outside here will really behave, would want our shares of Safaricom. So the demand of Safaricom shares will go up. When that demand increases, the share price will go up. But you see, you as a management accountant, you are privy to that information much earlier. And then you go and tell your wife today, hey, Safaricom share price will really even double. So your wife goes ahead and buys shares of Safaricom. And then she sells those shares immediately when results of Safaricom have been released, when the share price has doubled. That's what we call insider trading. This is what we call insider trading. Insider, you are trading with some insider. Yeah, with some inside information, confidential information. It is criminal to do this. That is why a management accountant shall really, even if you are talking too much, don't talk about work-related stuff. Yeah, we shall be very, very confidential. And then, ladies and gentlemen, we have the concept of what here? We have the concept of professional behavior. Professional behavior, you shall follow laws and avoid discrediting ISPAC, the profession. So remember, professional behavior is not only about like you as an accountant stealing even money. It also encompasses the qualitative aspects. How do you carry yourself outside here? Even on social media, you shall not be that kind of a person who keeps on just saying things that do not make sense. All right? Yeah, we must behave in a way that gives our profession credit. We shall never discredit our profession. Then we have what we call professional competence. We have what we call professional competence. So professional competence, we shall maintain knowledge and what here? Skills. Even after we finish our CPA, that will never be the end. We shall always, ladies and gentlemen, in this case here, we shall always, in this case here, continuously develop our skills and knowledge. If you look at your past papers, this is really a highly asked question. At times they call them ethical standards. There are 5. Which ones will I never forget? Number 1, I have integrity. We shall be straightforward people. We shall be honest. We shall be open. So if managers, for example, come and ask you, in this case here, what do you think about this and this situation? Please do your research about that situation objectively, without fearing, without biasness, without any strings attached, and then come and advise them. Tell them the truth, that you know what? There is nowhere you are going with this strategy of yours, depending on what you found out there. You know, the most dangerous thing that most of us accountants engage in, ladies and gentlemen, is basically trying to please people, trying to please our directors. That so long as this item has come from the mouth of the chairman, even if it's a bad strategy, you as a management accountant do not want to pronounce yourself, as you simply got that outside there. We shall always be truthful, because you see, whatever we advise is what these managers here will be following. Why can't we advise these people on the tenets of truthfulness? Always be truthful. And then we have the concept of objectivity. Don't go. You are working for a board of 10 people. and then you start taking sides. No. Any conflicts of interest? No. Don't start advising people, for example, to buy shares in a company that you happen to be having shares in. You shall always try as much as possible, ladies and gentlemen, to be independent. Being independent is what we call objectivity. Then, ladies and gentlemen, we have the concept of what here? Professional behavior. We shall behave in ways that give the profession credit. We shall always, whenever you see this gentleman called courier, how he carries himself outside here, other people, whenever they look at courier, they'll be able to say, even me, I would want to become an accountant, because courier is giving credibility to the Institute of Certified Public Accountants of Kenya. Then we have professional competence. You know, accountancy is dynamic. Things are really changing left, right, and center. So even after you have cleared your CPA, you will still be required to post what we call CPD hours. CPD hours. So it will be very, very important for you to remember. I've only mentioned the 4. Who can tell me the one that I've left out? I've mentioned the 4. One ethical standard that I left out. Probably you have explained that one. Competence and due care. You see, it's called professional competence. Thank you very much, madam. In full, that standard is called professional competence and due care. So, but I've only been able to list 4. Which one? Look at your handout. Which one have we forgotten? Confidentiality, yes. I left that one because I knew it was the easiest. We shall never disclose information that we come across without the client's authority. Is that okay? So then let's look at a few questions from our past paper. Let's look at a few questions from our past paper. So past paper practice questions, May 2025, question number 5A. Yeah. So this was about a strategy in terms of using business data analytics. Yeah. So in this case here, they wanted us to describe, this was last semester, describe the following types of business data analytics as used in strategic management accounting. We have number 1, pricing analytics. And then we have here forecasting analytics. So the first thing that I would want you to do for me, ladies and gentlemen, is to define big data for me. So if you can go to your AI or to your Google, tell me what is big data. Big data. Let's start from there. What is big data? Even you guys are searching. I hope you have access to our Wi-Fi. I hope you have access to our Wi-Fi, or we shall overcome. We shall overcome, eh? We shall overcome. So in this case here, what is big data? Big data. I would want to read this from you, especially on the pretext of the 5 V's. The 5 V's of big data. The 5 V's of big data. Because as a management accountant, for longevity of an organization, sustainability of an organization, you'll be required to work with data analytics. Yeah, we do big data. And so you must first of all understand what big data is. Courier, I'm so serious. I expect to get an answer from you. Yeah, you must go and Google. Doreen, you must go and Google. I expect to get an answer from you. Also, the online guys, I must get an answer. Power BI, no, Cecilia, thanks for trying, but we have what we call big data. Just Google there. Yeah, you can use Power BI, of course, to analyze. So, yeah, thank you so much, Rosa. This is extremely large and a complex set of data, extremely large. You can imagine, for example, like breweries, how much of data do they harvest every day? Coming from their social media handles, coming from their clients who are drinking, in this case here, their products, those bad products, I call them bad, yeah, every day. That must be extremely large data, which is complex. Complex, why? Because it comes, others will be structured, others will be unstructured. So you can imagine just somebody who comes, in this case here, to your Facebook, and then they draw something like, this is now unstructured. So somebody who comes and sends you an emoji, on your social media like that one. And still you'll be expected to be able to harvest this information and analyze it. So we have structured and unstructured. Yeah. So in this case here, extremely large and a complex set of data that organizations can use, ladies and gentlemen, for purposes of what here? Yeah, making decisions. You haven't yet answered Mwalimu's question because I wanted you to give me the characteristics of big data. It's called 5 V's. 5 V's. You can get that. I'm 100% sure you can get that. The 5 V's of big data. Yeah, I love what Leonida is telling me, volume. If it's big data, it must be voluminous. Don't go and collect data from 3 people and then you tell us it's big data. 3 is not voluminous. It must be voluminous. This data can only be called, ladies and gentlemen, big data if it is coming at a high speed. You see, velocity. Velocity means what here? Coming at a high speed. Coming at a high speed. I love that. And then we have, ladies and gentlemen, value. Yeah. If you cannot use this big data to make decisions, then it's not valuable. That can't be big data. It can only be big data if it's valuable. If you're able to use it to make what you're able to use it to make decisions. Variety. I love variety. Yeah, structured and unstructured. Others coming in form of numbers. Yeah, others coming in this case in form of, yeah, we need to make use of this big data. It can only be called big data if it is coming from various sources. So variety. And then we have what we call veracity. Veracity means what here? Accuracy. It means faithful representation coming to us without, as it is, without errors. If we get somebody, for example, like people are saying RCM is bad, for example, RCM is bad. But now I have people whom we call yes men. So they go and rub all that bad statements being given to RCM, and then they only leave good information. Then that is not veracity. Veracity, we want this data the way it is for us to be able to do what? To make decisions. Yeah. So then they came and asked us now. Yeah, velocity is all about, I hope you guys have been able to take your own notes. There are 5 V's. What have we said about velocity? From even physics, speed, high speed, yeah. Veracity is about accuracy, right? Value, being useful in decision making. Value, being useful in decision making. Then we have voluminous, large quantity. Voluminous, large quantity. I've forgotten one. I always like leaving one out to see whether you are following. Variety, yes. Different types. So, ladies and gentlemen, up to there, are we really together? Are we together about this big data? The online ninjas today, they're not talking to me a lot. The online ninjas are not talking to me a lot. So thank you very much. So, ladies and gentlemen, look at now what they asked us. You know, these examiners at times, they're very, very tricky, but we should be able to catch them. We are catching them. Yeah. Describe the following types of business data analytics as used in strategic management accounting. Yeah. Pricing analytics. Then number 2, forecasting analytics. Now, under pricing analytics, even if you have not been taught by anybody, you have not been to anybody's school, you'll be able to answer something to do with this. So under pricing analytics, how do we normally set our selling price? We normally take the cost and the profit. Yeah. So you look at how much has this particular product cost us? How much has this product cost us? So we have here cost. Yeah. Then we have in this case here profit. To get in this case here what here. So then when you hear about pricing analytics, if I'm the one using this big data, in terms of pricing analytics, I will get various costs. Yeah. Costs items that are in a card to produce this product. So this cost, of course, I will not look at this year's cost alone. I will look at, ladies and gentlemen, many past years cost items. Yeah, and the moment I look at, for example, this raw material needed to make this final product. 3 years ago, it was going for 10 bob. This year, it's going for 15 bob. You see, I can use what we call extrapolation. I'll be able to use this information even to forecast. So in terms of pricing, I'll be able to consider costs which have been incurred, and then I'll be able to look at the profit margins, which of course are not cast on stones. I will still have to do adjustments to ensure that I fit within what I intend to achieve. Because it's not about just coming from anywhere. You say it has cost me 1,000, I must get 20% profit, so I'm charging a price of 1,200. What if your price is double what your competitors are charging? So you have to be very, very careful, first of all, by looking at cost information. I must be very precise with the cost analysis, with profitability analysis. I must think outside the box. Because I'm a management accountant, I must go and ask competitors, how much are you charging, before I arrive at what we call an optimal selling price. Before I arrive at an optimal selling price. So, and I've given you an answer there. So in terms of pricing analytics, use of data to set or adjust product prices based on costs, customer demand, competitor analysis, and market conditions. It helps businesses find the best price that maximizes profitability, competitiveness, and the customer value. So example, supermarket analyzing the sales data to adjust prices of fast-moving items. Look at forecasting analytics. So under forecasting analytics, ladies and gentlemen, we shall use, like I was trying to explain, previous year's data, historical data, trends, and statistical models to predict future outcomes, such as sales, costs, or cash flows. Once in this case here, then we have been able to put this historical data, we have been able to get the trends, we've been able to get, like, give it a statistical model like SPSS. We are able to predict future outcomes. What do we expect to sell? Forecasting supports strategic planning, budgeting and resource allocation. Example, an airline predicting passenger demand to plan ticket prices and the flight schedules. So with your permission, I'll be able straight away to go to August 2024, question number 4. One of the roles of management accounting is to provide information that is useful for managers of an organization or various departments in decision-making. In line with this statement, explain 3 types of accounting information a management accountant could communicate to a human resource manager. I mean, put yourself in the shoes of this management accountant. An HR manager has come to your doorstep and she wants some information from you. So in this case here, then what kind of information will you be able to pass to this? I mean, I can see, first of all, this person will be interested in the salaries, bonuses. But as I provide salaries and bonuses and any compensation to the HR manager, I also want them, or rather his staff or her staff, to be productive. So I'll also be able to give them productivity report, which I simply pull from the SAP. So that's how you reason. These are not things that are really very, very hard. So answer, a management accountant can provide the following information to support HR decisions. Number 1, labor cost information, details on wages, salaries, overtime, benefits. You can see number 2, labor productivity reports, data on output per employee, absenteeism and efficiency. Then number 3, we have budget and forecast information. It's good you come and budget. Tell these people, I mean, employees should be able to know that this is how we are growing. We don't want to lose our employees in the future. So we expect the salary budget to be like this moving forward. So budgeting and forecasting estimates of future staffing costs, recruitment, etc. Employee benefits and incentive cost etc. Already you have gotten a few basic points that now you can go and run away with. Look at April 2024, question number 3. April 2024, question number 3. Management accounting is an invaluable tool to any organization at both the operational level and at the strategic level. Discuss 3 reasons to support the claim why this management accounting is an important, invaluable tool to any organization at the operational level and at the strategic management level. Now remember, operational level means what here? Day-to-day activities. Yeah. Short-term efficiency. Control. Strategic is what we talk about, what here long-term. So in this case, then day-to-day for operations, we'll talk about cost control. Yeah. Provides detailed cost reports, materials, labor overheads to monitor daily expenses. At operational level, we shall be doing budgets. Yeah, where we'll be able to compare on a daily basis, even weekly basis, compares actual versus budgeted cost. Yeah, at operational level, we shall be tracking the performance of our employees. We shall be tracking productivity. And then we shall be making what we call short-term water decisions. How about for long-term? When you're thinking about long-term, we are thinking about our non-current assets. We are thinking about, yeah, outside the box, outside our company. So management accounting at the strategic level, focus is long-term goals, competitiveness, and growth. Guides capital investment. Yeah, provides market competitor analysis, supports sustainability and risk management decisions, aligns resources with corporate strategy, the balance scorecard. Ladies and gentlemen, one thing that is supposed to be really knowing here is that when we talk about the day-to-day, we are looking at our operations. So during our operations, what kind of things do we expect management accounting to assist us in? Cost control. Cost control. All right. We expect these one here to always help us in doing like our weekly budgets, etc. For purpose of variance reporting. We expect in this case here productivity reports every day. So management accounting will be able to help us there. And then we have strategically, this great subject of ours will now make us think long-term. So long-term planning. So long-term planning, we must invest in our non-current assets. Yeah. So then in that case here, what do we think about? We think about, like if it is assets, we must evaluate them very well. Net present evaluation, capital budgeting basically. Ladies and gentlemen, for long-termism, we must get management accounting assisting us to do competitor analysis or stakeholder management. For purposes of long-termism, we must always think about what here, benchmarking. Yeah. So those are the kind of things that I would expect you to always keep on mentioning. Always keep on mentioning. So I can see 5 new, wow, messages. Yeah, the bottom line, yes. Very, very important. And then there is a very important note here. Very important note as I finish. I'm now finishing. Note, operational level is daily efficiency and control. Strategic level is long-term direction and sustainability. April 2025, question number 3A. They wanted us to distinguish between sunk costs and opportunity costs as used in decision making. I'll be able to simplify this for you. Now, ladies and gentlemen, remember that sunk costs are historical costs. Costs that have already been incurred. Those are sunk. They're sunk. They're sunk. And one thing you're supposed to remember about sunk costs is that they are irrelevant for decision making. They are irrelevant for decision making. Sunk costs, already incurred costs. So for example, for you to be in a class here, you've already paid school fees. So that is a sunk cost on your end. There's nothing you can do about it. Nobody will be able to refund you. No. Great. For those of you, for example, did very, very flashy weddings and incurred, for example, 5 million Kenya shillings, yeah, dowry and weddings. After, in this case here, for example, you come and of course marriage is not that rosy, things can happen, it's a bit bumpy. You can't go back, start asking Mzee to refund you. That's a sunk cost. It's irrelevant for future decision making. Now, in terms of opportunity cost, like all of you who are here, ladies and gentlemen, yeah, of course, you could be having some hassles you could have done out there instead of being in this class. Yeah. So, for example, there's an errand that would have run outside there, yeah, which would have given you like 1,000 shillings. But by being here, you are losing that opportunity. So whenever you hear about opportunity cost, so remember, this will be the benefit foregone for you choosing a particular alternative. Anytime you choose a particular alternative, there is a benefit you are going to forego. Yeah, remember in life, ladies and gentlemen, I mean, there will always be two forces that push you. Even, for example, when you put your alarm to wake up very early in the morning at 4 a.m., there is that voice which tells you, hey, wake up. Yeah, another voice tells you, in this case, you continue snoozing, isn't it? So if you continue sleeping, there is an opportunity you are losing, passing. There is your fees, which will disappear. So it will be very, very important for you to always remember that opportunity cost stands for any benefit you forego for choosing a particular alternative. There are benefits you forego. Those benefits are the ones in this case that we call what? Opportunity costs. Yeah, which is different from also what we call opportunity savings. So you see, under opportunity savings, for example, by being here, I want to believe if you aren't here, there could be a costly alternative that you could be undertaking outside there. So for example, if you weren't in my class here today, you could be out there engaging in an activity that would have cost you, like, say, 2,000 bob. But for being in my class, which is free now, you see, you are able to save that. Because if you weren't here, you would have been doing that exercise. So that's an opportunity saved, opportunity savings. We shall come back to that. All right. So we have a few definitions which are coming from management accounting, the basic one, which is very, very important for me to just summarize for you, because you'll always get questions from here. Now, here I will not even need to make any reference. It's about costing terms and the concepts. This is a paper I've taught severally. Yeah, I can easily summarize most of those things in a minute, and then we'll be able to simply appreciate. So, like, when we talk of, first of all, costing terms, what is a cost? A cost in this case here is the monetary sacrifice that you make to be able to provide a product or a service. So, for example, for you to have come to school here today, you must have paid somebody bus fare. You see, you sacrifice, you give them 100. So that monetary, sacrifice that you make for you to be able to get a particular product or a service is what we say it has cost you, or which a company makes for it to be able to produce products or give services. That's a cost. Now, we have various types of costs. But first of all, it will be very important for you to know what we call behavioral cost classification. Behavioral cost classification. So under here, we have got 4 types of costs. We have what we call variable costs. So under variable costs, ladies and gentlemen, what do we have? Like this quantity. Then we have costs. We have VC, our variable cost. So you can see variable costs are those costs that increase as quantity increases. That's how they behave. They increase as quantity increases. So if you're writing your small notes because you don't have these ones there, they increase as quantity increases. As quantity increases, they increase as quantity increases. Yeah. That's number one. Then number two, we have what we call fixed costs. These are funny costs. Funny costs. Why am I calling them funny costs? These are costs that are ever constant. It doesn't matter how quantity is behaving. They are always constant. They are always constant like this. So if this is quantity and these are costs, this will be FC, fixed cost. They remain constant. They remain constant. They remain constant like that. They remain constant. They remain constant. They remain constant. So can we get to know whether you guys are able to follow? Can we get to know whether you guys are able to follow, especially the online guys? The online guys, are we able to follow up to here? Yeah, thank you so much. And I hope you're loving the subject. I hope you're loving the subject. I hope you're loving the subject. I hope you are loving the subject and you shall be able to make a conscious choice, yeah, to study AMA with RCM, the #1 college in East and Central Africa. Yeah, great. Ladies and gentlemen, we shall be able to continue here. Thank you so much, Margaret. Chief Ninja, great. So then we have other cost behavior. For example, we have what we call semi-variable costs. Costs which are partly variable, and partly fixed. Partly variable and partly fixed. Partly variable and partly fixed. Partly variable and partly fixed, like this. Now, let me ask you a question. Assuming in this case here, you are to take a trip, yeah, over December, the whole December, you say, now I'm going to Dubai and I will not, as a family, we shall not use our home totally. So the home will be total darkness over that entire 1 month. No light bulbs, nothing. Will be consuming electricity during our absence. Does that mean that at the end of the month of December, you will not get any bill from Kenya Power? If you don't use any electricity, does it mean that you will get zero bill from Kenya Power? Somebody, are you listening to me? I doubt. You haven't, in this case, stayed in that home for a whole month. So end of that month, will you get zero bill from Kenya Power? No. Kenya Power, they need like a retainer. They have what we call meter charge. So this meter charge perhaps could be like 120 shillings. So basically, this is the semi-variable cost. That cost which is partly fixed here. This is a fixed component. And a partly variable. Partly variable like that. Partly variable like that. It's called semi-variable costs. So you can see now this component is ever fixed for everybody. And then now we have this other component which is now directly related to the kilowatts, to what you consume, to the kilowatts, to what you consume. Maggie is saying no. I don't know where Maggie is lost. Do you have a question, Maggie? Maggie, do you have a question? Please feel free to ask, Maggie. Feel free to ask. Feel free to ask. Feel free to ask. All right, ladies and gentlemen. So that is it. So that is it. That is it. That is it. So partly variable and partly fixed. Partly variable and partly fixed will be very, very important for us to know about this. All right. And then we have what we call the stepped fixed costs. The stepped fixed costs. Because you'll get your examiner asking you these kind of questions, which basically are emanating from your management accounting knowledge. So the stepped fixed costs, they remain constant. They remain constant for some range. Beyond that range, they increase by a lump sum amount. So stepped fixed costs, they remain constant within some range, beyond which they increase, in lump sums. beyond which they increase in lump sums. So they remain constant within some range beyond which they increase in lump sums, beyond which they increase in lump sum amount, in lump sum amounts. A good example will be rent. When we tell our landlord that so long as we have, in this case here, 10 students, we shall be paying you a constant amount of 8,000. Beyond 10 students, we'll want extra room. So he gives us a room, for example, and he charges us 10. So we start paying him 18, again, constant up to some. So whenever we talk of stepped fixed cost, these are those costs that remain constant within some range. Beyond that range, they increase in a lump sum amount. So ladies and gentlemen, I think we should be able to stop there. Yeah, this is again our very, very first class. For those of you who want to join RCM College, so this is our number, 0793 555 000, 0793 555 000. Once you hit that number, we shall be able to assist. We shall be able to assist and enroll you to RCM. So have you enjoyed our session? Have you enjoyed our session? The results are coming out now. You'll be surprised. You will be surprised. Yeah, I will be surprised. They're coming out now. They were released actually yesterday, but their system itself had issues, which I'm told now they have rectified. So anytime, expect anytime. All right. Anytime. Yeah. Yeah, if you need the CASNEB loan, there's a number there you need to call. Great. So thank you very much. And bye. See you another day. SMS option hasn't yet started working. Yes, Leo, we are overcoming.